Hello and welcome to another update video about Bitcoin. Yeah, the Bitcoin chart continues to be hovering in this range here, particularly in this really boring sideways range. Eventually, generally, if you look at this entire range since March, I mean, the price has really only just moved sideways. It is boring. Let me know in the comments if you think it's boring. I think it is really boring. The problem is that we're really hovering at every juncture here, and that's difficult. That makes it really difficult because if we don't get a real flush, then it will be really difficult to turn this market. You just need to scare the people out of this market. You need to scare people out of their positions in order to turn the market. And at the moment, it is just slow motion on the way down, really slowly. Nothing really important happened over the last few weeks. Really nothing important happened. We could just look at this daily chart and nothing changed, okay? So the scenario is still very much valid. We have bullish structures to the upside. You can count the entire move up here on the daily as a wave 1 into the April highs or as a 1-2-1-2 setup. I'm currently counting this move here as a WXY structure. Before we dive deeper into the analysis, let us put the spotlight on our sponsor ChartPrime. ChartPrime is a service that offers a selection of specialized TradingView indicators designed to support you on your trading journey. The first one is the Market Oracle Pro. This tool, designed for precision, provides enhanced entry and exit signals along with 3 metrics aimed at deciphering market trends and optimizing your settings. Next, we have the Market Dynamics Pro. This unique tool merges ChartPrime's smart money concepts into a dynamic order block algorithm and is striving to provide a more accurate representation of volume. Lastly, the Prime Oscillators Pro. This trend-based oscillator offers a variety of market insights, including entry and exit points, overbought and oversold conditions, and potential reversal areas. That's a brief overview of what's new from ChartPrime. Stay tuned for more updates, and if you'd like to sign up with them, just follow the link in the description that offers you a discount. Thanks for watching. So we have a wave W, an overshooting X wave and the Y wave down, and then here an A, B, C structure. Of course, on the 11th of September, the low could have been in, but there is just no evidence for that at this stage. And what I wanted to emphasize, someone asked me, my wave W apparently is a triangle. No, it's not a triangle. Okay, this is not a triangle. A triangle looks different. A triangle, it could be an expanding, could be a contracting triangle, but this is not a triangle. It's just a corrective move down. So a triangle would be a 5-wave move, and the wave W cannot be a triangle in this case. So triangle would be this. Yeah. That looks different. This is just a 3-wave move down, okay? Just an ABC basically, okay? And the C wave is probably an ending diagonal. So yeah, no, there is no triangle there. Very important to understand. Maybe you're confusing what a diagonal pattern is with a triangle. Nevertheless, the overall structure still suggests we should go lower. Certainly price action isn't bullish of the 11th of September lows. I received questions about, could it be this? Could it be that? How would it look like if the low was in? Well, if the low was in, I mean, it's on the chart, right? It's on the chart. If the low is really in here already, which I cannot rule out, but I just don't have the evidence for it. If the low is already in, we've got our target on the daily time frame, right? We have our target. It should take us in the third wave into the region around 43 to 53K roughly in a third wave. But I can really only specify that target really precisely once we have a confirmed low in place for a wave 2, and I just don't have it. So what is very important to understand is that we're still in a downtrend, okay? We are in a downtrend since the July highs. I mean, Elliott Wave wise, the correction already started in April, but obviously it made a pretty impulsive looking X wave to the upside. So you could say the downtrend started here technically, okay? It depends on what method you're looking at and depends a little bit on your perspective, but the trend is down, okay? The trend is clearly down. We had a 5-wave move to the upside in an A wave, okay? So the trend is clearly down. The move up is choppy and corrective. This is resistance. goes all the way up to 30.3K. And as long as the trend is down, you just need to be prepared for further downside. Okay, it's very simple. As soon as the market gives us a signal that the trend is up, you know, we can switch sort of, okay? So you need to prepare that it can go lower. I did mention my ideal target. So ideal target, if I take the length of the wave W and I go to the high of the X wave, then we talk about round about, one second, just need to go a little higher here. So we talk about round about, where are we? Here, the 1.618 extension is, for example, the 22K level. Yeah, very important level. That's an important one to watch. 22K. Another level to watch is if I take the length of the A wave, go to the high of the B wave, it takes me to 22.7K. So 22K is sort of, I've been saying over the last few weeks, you know, 22 to 24K. That's sort of the region. It's also sitting in between the 50% retracement and the 38.2 retracement level. So I'm watching that area. Can I promise you that the 22K level will hold? No, of course not. Because if the trend is down, we just have to go with the trend. You know, the trend is your friend, unless you don't respect it, basically, okay? Common sense. So if you don't respect the trend and you try to work against the trend, then it's not good for your wallet, basically, all right? Or for your bank account. Important to understand that we are still in a downtrend. My strategy remains, if we get a flush, I buy a little here and there, you know, spot positions. The lower we go, the positions will grow larger. And once we have a confirmed reversal, I will take a more aggressive futures trade. We cannot do that at the moment on the long side because we have no position, no price point where we can really effectively set a tight stop. So we haven't got that setup. We haven't got those 5 waves up, 3 waves down. We only had a few short setups in the last few weeks and they sort of worked out nicely. They weren't really followed through at some point, but most of them worked out and we had good reactions to resistance areas. So the movements to the downside, they can be quite aggressive, but nevertheless, it is just slow motion and very boring for a lot of people, okay? And including me. It's just very boring. Yeah, I mean, someone asked me, you know, if I could I admit or something that you know, this is boring price action and that I'm bored. I mean, absolutely, I'm bored with crypto. I mean, it's just not doing much, okay? It's not doing much. And that leaves us with analyzing short time frames, which are sometimes just meaningless, unfortunately, okay? That's just unfortunately the situation we're in. Can I rule out we get new bear market lows? No, of course not. I mean, there can always be a black swan event, something that could bring the prices down. For me, the key level to watch is the 18K level. If we get a sustained break below 18K, and that can differ by a few $100s based on the exchange, but roughly the 18K level. If we get a sustained break below that, I have the road here to 8 to 10K on the chart, and that would be new bear market lows. I personally would treat that as a gift. I wouldn't absolutely, you know, I would be very happy about that generally from an investment point of view. I treat Bitcoin as an investment asset, as a portfolio asset. Altcoins, not so much, not at all actually. But Bitcoin, yes. And if a portfolio asset goes really, really, really far down in value, I mean, I'm happy to accumulate, right? If I believe in it, sort of believe in it long term, right? I would treat that as a gift. Bitcoin, Ethereum coming down a lot. And altcoins, that's exactly the reason why I call altcoins only as trade setups. You know, they're just for swing trading. They're not really for investing. Because if we see those prices, I mean, I don't know what happens with some of these altcoins, okay? Just be aware that that is why we don't want to be aggressive on the long side until we have a certain setup that would support that. At the moment, it's all about managing, I think, managing position sizes, you know, anybody who's interested in the long run. I mean, as I said, I just scale in on the way down, but keep it slow now, keep it light until we have a bottom in place, you know. And as we have a bottom in place, it's all about more aggressive movements. And when we have another, let's say, very violent move down, like we had it here in March or in November last year, I mean, that's when I will buy larger positions spot. Yeah. And if we then have a confirmed reversal, I mean, yeah, futures trades, why not, you know, but then we can add a tight stop. Okay, let's look at the shorter time frame. Nothing happened here really. So Bitcoin's still on this way down. I prefer the orange wave count. We're probably doing this wave 4 as discussed in previous videos. Resistance remains at 27,620. As long as that's not broken to the upside, the focus is on lower. One more low should give us a decent 5-wave move to the downside. I would count that as a wave 1 of C. We should then get a wave 2 that will probably lead to more choppy price action in this boring range. And I would be surprised if we break through 25.3 in one go. Probably after this wave 2, we could come down. But we are still sort of in the middle of this move. I mean, it can take a while, right, to play out. It can really take more months for this to play out eventually. So what we also see here is a potential head and shoulders that could emerge. You know, I've got here a bit of a, that's a bit speculative, of course, but you can, if we just extend this sort of support line there, okay, you see what I mean? If we test that level at 26K, get a bit of a bounce, and that could be our wave 2. Can you see how that would work out? We get our wave 5 of 1 here to that trend line or to that horizontal support line. Then maybe a wave 2, which would be a corrective bounce, and then down. Yeah, and we've got our perfect head and shoulders pattern that could really break this thing down completely. And that's really when the fun would start, because this third wave to the downside would, bring it probably straight away into, below 24K. Okay, so that's sort of what I'm watching. Yeah, but there is not much more to add. Tomorrow we've got our member live stream. Check it out if you're interested in the membership. We talk about trading certain patterns, there's always an educational topic. We'll do that tomorrow, and we cover some member requests. But yeah, hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure you follow us on Instagram and Twitter. And if you're interested in the S&P 500 and some stocks and shares, check out our S&P and stock service. We launched that last week. You can find the link in the description. Thanks a lot for watching. Bye-bye.